All right, we are talking about seed funds today. In the scheme of entrepreneurial financing, if using your own money from your job was on a spectrum of the easiest thing to do with the least complexity, and then borrowing money from your mom, and then your uncle, and then winning a business plan competition, kind of all the way up the complexity ladder through commercial loans, you'd get somewhere near the larger deals and the more complex deals, and you would get an angel investor, a seed fund, and a VC. So this is kind of where we are on the spectrum, far along that spectrum of investment. It's important to understand how seed funds work, what their appetite is, what their tolerance is for investment, and importantly, how the managers make money. The reason that's important is because you won't be able to understand their behavior unless you know what how they're incented and how they make money. Once you understand how a seed fund works, it's much easier to know whether it's an appropriate investment opportunity for your company and why they behave the way they do in a lot of situations. So let's start with the goal of a seed fund. What is the goal? The goal of a seed fund is to invest early, to test ideas, and to provide seed capital. So the very first bit of capital that a company will need in order to prove something out. Different than an angel, because generally they have a slightly larger appetite, meaning they can come up with more money, and different than a VC, because a VC's goal is really to put money into a company so that it will grow rapidly. The seed fits that gap that sometimes exists between the angel investor, who might only have an appetite of between 50 grand and $500,000, and the VC, who wants to put millions of dollars at play. If the company's not quite ready, or you need to prove out the idea, or you're trying to take smaller companies and grow them, that's where the seed fund comes in. So how much money does a typical seed fund have to invest? Well, this varies. There are different size funds that call themselves seed funds, but for the sake of this example, we'll say these are typically between 10 million and 15 million under management. So that means the entire fund has 10 or 15 million bucks to play with. And we'll talk about how they play with that, and I'll give you some examples of how they run their fund. But that doesn't seem like a lot of money. The reason that they can do a lot with that money is because the typical investment size isn't that large. It's usually about between 500K and 2 million. Actually, probably more like $1 million. So people may tell you later, hey, I know a seed fund that's bigger than this or smaller than this. And so these are industry average numbers. There are going to be some that have bigger appetites and call themselves seed funds, and some that have smaller appetites and call themselves seed funds. But this should give you some idea. 10 or 15 million bucks in the pot. They're doling it out at they have 500 grand to $1 million sort of investment size. So how many companies does that mean a typical fund can invest in? Well, you can do the math. Usually the managers can only handle between 10 and 12 companies. And another reason, well, because they have to sit on all these boards, and another reason is that if the initial investment might be 500 grand, they may invest more later, and I'll give you some examples of that. So they want to have some money in reserve for some of their companies. So what's the duration of these investments? Meaning, how long does the seed fund interact with the company? This can vary again, but this is generally about 3 to 5 years. They're going to want to get out of these investments and realize a profit sometime before that, but they will work with these companies for quite a long time to grow them. So this isn't an investment that they make and then just walk away. Participation. What this means is, how do they participate over time in a company's evolution? And essentially what these guys will do is they'll do the seed round, so they'll put the first money in. And if things go well and a company needs additional capital to grow and they go raise a venture round, they may participate in the A round as well. But it's not too often that they'll continue putting money into a company after this point. They've really done their job by the time the company gets to the A round. They're in a different financing bracket and good for the seed fund. They'll still be a shareholder, they still may sit on the board, they still may participate in other ways, but they may not continue to dump money in because they just don't have that much money to dump into every company. So what is the expected return? What does the success look like for these guys? typically their expected return is going to be 3x, and I'm going to say and above, because a lot of times they'll do much better than that, but if they get a 3x return on their money, they're probably relatively happy. These are very high-risk investments. As you'll see in a second, some of the companies will cease to exist at all. So getting a 3x isn't so bad. Seed fund managers would tell you that's not a raging success. They'd like a 10x maybe, but that's really the range that they're working in. So I put preferred stock board seat and restricted stock purchase agreement down here at the bottom. These are three important things. Seed funds are institutional investors. They are not individuals, so they will have a higher caliber of terms that they will demand from companies. They're a little more sophisticated. These are examples. They'll want to own preferred stock, not common stock. They'll definitely want a board seat, if not more than one. And they will often ask founders to execute what's called a restricted stock purchase agreement. Also, I wrote all these terms on the board because these are sometimes used by seed funds. I won't go through all of them. We've got individual videos that explain each term in detail. These are terms you should definitely understand if you are considering approaching a seed fund or a VC fund for funding. So a really important question, how do these guys make money? How do the managers of these funds make money? This is a concept that is often referred to as 2 and 20. And what that means is the managers make 2%, this is busy, I'm sorry. The managers make 2% in management fees, and they make 20% of the profit that they make, okay? And there's another video that'll explain how the math works in detail, but in short, they make 2% of the total fund annually in management fees and 20% of any profits. That's important to understand because they really would like their investments to make profits. This isn't a for-profit, not-for-profit enterprise. So the companies need to make money, and their allegiance lies with the companies, not with the entrepreneurs. So their goal is to make that company work. So who are their investors? Where do these guys get their money to invest? Sometimes seed funds are run by high net worth individuals who are just using their own money, and other times they have what's called LPs, limited partners.